So let's talk about the most basic chart patterns and chart analysis techniques that there are. Firstly, we can have a continuation pattern. This is where the stock may move up and then consolidate, move up again, consolidate, and potentially move up again, i.e. form a trend and then consolidate as it continues on its trend. Now that can either be happening on an upward or a downward basis. In this example, we just showed it going up, but it could just as easily have been a downtrend with downward thrusting bars and then a consolidation. The other type of pattern that we often see is one called a reversal pattern. This is where a stock goes up, then comes back down, then goes back up again before reversing again, going back down. It's much more difficult to trade. There it goes up again, and then a big steep decline before it goes up again and then down again. And as you can see, one pattern is quite easy to see and the other one is quite difficult on the eye. This one, the reversal pattern, is far more difficult on the eye, and people who try to pick out turning points invariably will fail. Now, I realize that there are all kinds of sexy products out there which tell you that they can predict where a chart is going to turn. Well, I can tell you with 100% certainty that they cannot. Trying to determine the turning point of a stock is a complete fool's game. How do I know that? Well, because I tried it for many years and it just didn't work. It's very difficult to learn and to actually apply proper money management and trade management techniques when you're looking for something to turn at a specific point. And it's very easy when you're looking for a specific turning point to make excuses as to why it didn't turn at that level. And once you start making excuses for why something didn't do what you thought it might or should do, at any one time, what you'll find is you start to break your own trading rules. And once that starts to happen, it's game over and you'll fail at this. So we do not really like to look at reversal patterns. With flag trading, we are far more inclined to look at continuation patterns, which have a nice habit of putting us on the right track for money management. And there's another byproduct of this. If you're managing your money in the right way, because the pattern that you're selecting helps you do that, then it means that your whole trading psychology and outlook on trading is going to be far more disciplined and far more relaxed as a result. And that is exactly what we are aiming to do. We're not looking to get every last dime out of a trade because that would be virtually impossible to do. What we can achieve though is how to get into a trade, how to get out of a trade, and also how to ride our profits within a trade, and that is one of the big keys to all of this. So let's look at the chart patterns that are relevant for us as we trade flags. First of all, trends. We'll be going through this a bit later, but I'm just going to make the list right now. So we've got trends, we've also got flags, bull flags as the stock goes up, and bear flags as the stock goes down. We've got pennants and triangles, which are basically a variation of a flag, but they're essentially flags and I play them in the same way. Bowl and cup, cup and handle, support and resistance, double tops and double bottoms, and finally, volume patterns, which are supporting the actual pattern of the stock price. Let's now go through these one by one. If you look to the right-hand side of this chart, you can clearly see that it's trending upwards. But before it was trending upwards, it was actually trending downwards. And we can see that if we just draw a simple trend line and we look at those arrows, the stock actually kept on hitting that trend line. Not 1,000,000% precisely, but certainly approximately and easily enough for us to be able to draw a line across and see that their downward trend line was in progress. And at a point in time at the beginning of August, that downward trend line was broken for good, and after which time an upward trend certainly started. And again, you can see where that upward trend line was hit. Now I may as well tell you right now that a trend line, and you can see two trend lines here, one is a downward trend line which hits the tops of the bars, and one is an upward trend line which hits the bottom of the bars. Trend lines are incredibly important to us in the method by which we're trading flags. Over the years, I've found that this simple thing, a trend line, is the single best way of how to manage my money and how to ride a trend upwards or downwards in order that I can maximize my profits. It may be very simple, but trust me, trend lines are very important and they're going to make you a lot of money.